good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, and closing trades are not looking as good as they were looking during the midday because we had seen that sudden surge happening in the Nifty and Bank Nifty after the governor had announced that CRR cut by almost 50 basis points, of course in a phased manner. But for now, the market has given up part of its gains. In fact, it's in the red right now. Not a whole lot, just around the 20 points lower, but still in the red for what it's worth. What's actually holding out quite okay is the metal index. Take a look at that rally in Vedanta. That one is up 6% in the trading session. Hindustan Zinc is doing quite well with that 2% gain coming in. Maybe perhaps Street is expecting some sort of update on that demerger news because that was the trigger point for the month of December. Not really sure if it's happening or not, but just that the stock is fairly active in the trading session. From the auto pack, Bajaj Auto is doing quite well. Exide Industries is in focus. Tata Motors has actually managed to bounce back quite nicely with that 2% gain. And Motherson also announced one of the acquisitions of sorts, so that stock is in focus just ahead of that. In fact, if you look at the broader markets, MCX is one stock that deserves mention. That stock is up 7% right now. Earlier, we had seen the financial market ancillaries, the likes of BSC, CDSL, CAMS, Angel One, etc. rally. Today, it's MCX, which is up 7%. Delivery is the other one. Macquarie came out with a note this morning talking about their favorite 6 stocks. Delivery featured within that, so that stock is up almost 5% right now. Policy Bazaar doing quite well. Blue Star is in focus. We just spoke with the management of Blue Star a couple of days ago, and they were confident of the kind of growth rate that we should expect on a sustainable basis. Winter has set in late this year. There is that increased urban consumption still. Festive season as per them was fairly strong, and all of that is playing a part as far as the Blue Star sentiment is concerned. And then some of these, urban discretionary plays. Take a look at Jubilant Foodworks, a Devyani International, a Gopal Snacks, a Bikaji. All of these stocks are in focus, and even the power basket. So a CSC, a NHPC, a SJVN, a Tata Power. Tata Power, of course, came out with its new targets for the year FY30, and all of that is having an impact on the stock prices right now. But let's try and decode what the setup is looking like. Naresh Murani, Kunal both are in the house just for that. Naresh, let me start by asking you a bit of a petering of gains per se in the trading session today, below the mark of 24,700. Is anything getting undone, or is just the healthy sideways move that we are witnessing?
So some bit of consolidation is normal. We've had a good enough rally. And in the Nifty, we may have just had a 1200 pointer rally. But if you look at the way other indices have gone up, so a Nifty microcap 250 almost made a new all-time high today. You're 2% away from all-time highs on Bank Nifty as well as on the small cap index. So a little bit of a consolidation, finding a new base, say closer to 24,400 to 24,800, 25,000 odd levels. A consolidation would be pretty normal here.
Consolidation would be pretty normal out here. But Kunal, what's your sense on the metals pack shining away?
Well, yes, absolutely. And I think Vedanta is one of the major reasons why the stock has, the index has moved up higher. We've crossed about the 9,350 plus mark for the Nifty metal index, and that comes after almost weeks of the index going to a consolidation. So I think there was a point when the metal index had broken below the 9,000 levels. So it's a good recovery for the index. We are trying to challenge back again, the 200 moving average for the Nifty metal index, and I think that's going to be a very, very important pivot zone for the index. Now, what we've also seen is strength coming across other metal stocks. For example, JSW Steel was one of the stronger names so far over the last few days of the market rally. The stock managed to break past about the 1,000 levels. Hindalco today has shown some signs of pickup of price action, breaking the 670-75 barrier. So many of these metal stocks are trying to come back again into a swing breakout mode. So that I think could augur very well for the entire sector.
Okay, auguring well for the entire sector. Sampath Reddy also joins us on the show to talk to us about the fundamentals. He's, of course, the founder and fund manager at Azurian Investment Managers. Sampath, hi, good to be speaking with you. Been a while. What's the sense on metals? Because this is one space that, retail investors tend to stay away from, given the moving parts it involves. But do you think Vedanta is finally coming out of the woods with respect to the debt issues being sorted out, with respect to the capex that they have lined up and that impending demerger?
Yeah, generally the metals as such have been deep cyclical kind of a companies, and currently if you see most of the metal prices are going through the the down cycle, especially the steel as such has been going through the severe down cycle, and generally the commodities as such one would normally tend to buy at a high PE and sell at a low PE. What does it mean is that, today the profits are very suppressed or depressed, because of which their PE may appear to be higher, or sometimes, there may not be any earnings, and and they will be generally be sold, when they look at humongous profits, and at that time they appear to be very cheap in terms of PE wise. But I think, from a cyclical point of view, yes, I think metals are going through the some sort of a downside, the down cycle, and maybe, for a little bit of investors who have the risk appetite, with a view of playing this upcycle again, maybe the entry point is right in the metal sector as such.
Okay, that's the view coming in as far as the metals pack is concerned. But what's the view on autos? That has the street divided a bit, Sampath, because that flare in consumption is missing as far as the mid segment is concerned. How are you looking at playing the auto theme, if at all?
Right. I think, automobiles is a pretty good sector. I think, last couple of months, generally, there has been a slowdown, especially the quarter two. If you see, by and large, most sectors and companies have seen a bit of a slowdown in the demand. I believe that will be a temporary phase. And if you look at the, especially the auto OEMs, whether it is in the passenger cars or two-wheelers, or even, even in the UVs and, tractor side, all the OEMs are, exceptionally, in a good companies with a very high return on equity and return on capital employed kind of ratios. And this phase which we are seeing in the last couple of months, which is slightly lower demand, I think is a more of a temporary phase. And even if you look at the threat of the EVs for the OEMs in the past, about 6 months to 1 year back, there was a bit of a concern. But I think it looks like it's basically the incumbents, which are, whether it is the M&M, or whether it is the two-wheelers, their incumbents are the ones who are really getting their hands together and coming out with the models in the electric vehicles as such. I don't see a threat of even EVs for the automobile sectors as such. So overall, I think we like the sector. The current slowdown in the last couple of months we are seeing in terms of demand is I believe, is a temporary. We would like to be overweight on this sector.
You are suggesting, or at least trying to be overweight on this sector. But Naresh, if I had to ask you about consumption, and I'm looking at these QSR names, the Devyani, the Jubilant, the Westlife of the world, and even those, the snack companies, the Gopal Snacks and Bikaji of the world, all 5 of these names will come up for you on the screen, because the stocks are, excited today. What's your view in the sense as to what's looking the most interesting of the charts?
So Gopal Snacks has done really well, even Bikaji. So for now, they're getting into a consolidation. The most interesting name is Jubilant Foodworks. The stock has been trying to make that comeback for the last 2 years, roughly. The previous high back in 2022 was 650. We went above those levels, again flipped back, and now we are back above 650. The recent highs are around 700. So the stock has gone nowhere. Looks like a possible case of momentum to continue in Jubilant Foods. Will keep a strict stop loss below 660 for this one.
So that's a view as far as the QSR basket is concerned. What else is happening in the market? Let's deep dive into some of these names. IT today is on the back foot. So Infosys is down. Wipro is retracing a bit. TCS too. Maybe after that solid rally that we had seen over the last few days, today it's a bit of a softening of stance, and ditto can be said for HDFC Bank and ICICI Bank as well. Sampath, what's your view on these heavyweight financials? And if you had to kind of create a pecking order, let's say between HDFC, ICICI, SBI, Kotak, Axis and all of those of the world, what's your pecking order between financials?
Right. If you see the overall, the weight of the banking sector as such has been, quite high in most of the benchmarks, whether it is Nifty or whether it is a 200 or 300 indices. And, given that, most of the fund managers, including us, are by and large, invested in the pretty much, at least I would say, top 3 to 4 names. If you ask me, by and large, we've been liking the the larger, the larger 3-4 private sector banks as such, and we've been invested in, those names. I would be difficult to, choose between the, 4 or 5 top names, and by and large, it's good to have a basket of those 4 or 5 names. Even in the RBI governor also is mentioned in the in his speech that the quality of the banking sector is where is at one of its best in terms of asset quality or even any other capital adequacy ratios or any other parameters. And at the same time, the valuations are also, I would think, on par or slightly below the long-term average. So I think this sector, I would think, top 4 or 5 banks is what, as a basket would like to, have an exposure.
Okay, point taken. So that's the view coming in. And of course, the RBI governor in his, kind of statement did mention that the gap between the credit and the deposit growth is narrowing. And with that CRR boosts coming in, there's going to be additional liquidity in the system to the tune of 1.16 lakh crore rupees. In fact, as we head into this short break, hear out what the RBI governor had to say about the slowdown having bottomed out.
Going forward, high-frequency indicators available so far suggest that the slowdown in domestic economic activity bottomed out in the second quarter of this year. And it has since recovered, aided by strong festive demand and pickup in rural activities. Agricultural growth is supported by healthy kharif crop production, higher reservoir levels, and better rabi sowing.
Back with closing trades right here in 80 now. We're absolutely flat, exactly how we started off in trade, but a bunch of buzzers out there. Delivery, for instance, you don't typically see this one moving. When you talk about online platforms, it's only a PB Fintech, Paytm, Zomato or a Swiggy you talk about, but delivery has moved up a solid 6% right now in trade. Stock holding up very well. There's MCX up higher by about 7.5%. Jubilant Foodworks has moved up 5.25% today. And then Vedanta is standing mighty tall with a good 6.5% sort of gain. Still in conversation with Sampath Reddy as well as Naresh Mirani and Kunal. Kunal, just a couple of buzzers, delivery, Jubilant Foodworks in particular.
So I think Jubilant Foodworks is something which has given a breakout. 675 was the previous resistance for the stock. And it's a classical double bottom at play for Jubilant Foodworks. So now the stock is getting towards a break above the 700 levels, which I believe should be broken in the next couple of trading sessions, looking at the momentum as well as the setup in terms of prices. My expectation is that the stock should be heading towards 725 to 750 range over the very near term. So I think even at current terms of 690 thereabouts, it's a good level where traders could look at a buy with a potential target around the 725 to 750 range. Delivery, on the other hand, that stock is showing first signs of a recovery after weeks of price correction. So the recent swing high in the month of September for the stock was around the 440 plus mark. The stock had broken down to almost 320, 323 kind of a support zone. But I think now it's trying to claw back again. It's still yet to give signs of a confirmation in terms of moving averages breakout. So we'll maybe wait for another couple of days. If the stock sees a follow-through up move or sees higher volume days for itself, then we can expect the stock to get back into a turnaround mode.
Okay, a bit of a turnaround is what one is anticipating for delivery. Of course, a fair amount of buoyancy kicking in for Jubilant Foodworks today. Sampath, where is it that you are finding value within this entire online platform category, if you will? Of course, Zomato has been the much loved story, but other than that, any opportunities you think?
Both the Zomato and Swiggy are doing quite well, and the kind of growth runway that these two companies have is quite large. Food delivery has been growing well and probably now still growing, reasonably, higher rates around 18-20%. But the quick commerce as such has picked up, additionally and growing at a very rapid pace. The interesting thing with these kind of companies is that they will keep adding new verticals to new verticals of growth that's the biggest challenge in terms of if you look at them in terms of purely an valuation, when they add an entire new set of business and which is scalable in a massive way, that's when the people who are looking purely from a value and valuation side of it will get it wrong. I mean, go back and see Zomato and Swiggy was just as a food delivery companies, probably they would have appeared quite expensive, but they've discovered as a new additional way of doing the additional business line, which is in a quick commerce. And tomorrow, who knows, what else they will be able to, add more verticals to it. That is the biggest challenge from the value and valuation point of view of these platform companies. We would probably, continue to like these names and, stay invested in these companies because, become quite large, and especially Zomato, the way it has moved up, it could come into the quite a bit of benchmark indices as well. So we have a positive view on this particular space.
Right. In fact, many more to be joining the bandwagon. And when you talk about quick commerce, who would have thought that Myntra as well is now claiming that they're going to be delivering their products in a 30 minutes time frame. Of course, the pilot is going to start with the city of Bangalore, and then they will venture out to other metros as well. My colleague Sumita Karir joins in with more details on what exactly is Myntra's plan when it comes to QCom.
Well, there's a new entrant into quick commerce, Myntra. It has launched its 30-minute rapid delivery service, which is called M-Now in Bengaluru. Remember, the service will deliver apparel and accessories. And from Bengaluru, then, it will be expanded to Mumbai, Delhi and Pune in the months to come. It will be partnering with third parties so far as setting up of dark stores is concerned. In fact, Myntra is also looking at increasing its assortment from 10,000 items to about 1 lakh items over time. And Morgan Stanley, of course, has estimated the quick commerce market to be worth $42 billion by 2030. Perhaps that's what explains Myntra's entry into quick commerce. In fact, it's not just Myntra. Several other players have made their entry into quick commerce. In fact, venturing into fashion specifically, Myntra has shared a statement, and it says that we're truly grateful for Myntra's strong association with leading brands across the globe, which are at the center and front of catering to the evolving fashion aspirations of the country. Well, that's the word coming in from Nandita Sinha, the CEO of Myntra. Like I said, ladies and gentlemen, Flipkart piloted 10-minute delivery service called Minutes in Bengaluru. Then there was Big Basket as well that forayed into quick commerce with BB Now. There are others as well, like Reliance Retail, that's foraying into quick commerce via JioMart. And then there are car services, cab services like Ola that are exploring their entry into quick commerce with their own dark stores. So definitely this sector is all set to get heated up. There's going to be immense competition given the kind of players that are entering, that we are seeing enter into the sector.
Okay, thanks for that, Sumita. But let's put the spotlight on some of the IT names as well. They're, of course, retracing today after the big rally that we have seen earlier in the week. What's your sense, Sampath, on the IT stocks?
I think pre-COVID IT services companies were growing much lower rate of growth, broadly in the range of about 7-8% in terms of dollar revenue growth. And the post-COVID, the revenue growth surged quite high, upwards of almost like a 20% kind of a thing. That is when these IT services company got re-rated. But I think the growth rate is now going back to 7-8% kind of run rate per annum. Prior to the COVID, these companies were trading when the growth rate was just about 7-8%, trading as low as a PE multiple of 15-16. And today, when the growth, as the growth rate picked up, they got re-rated big time. But now the growth is slowing back to the pre-COVID level is what I would think of, maybe slightly better than the pre-COVID level. For that reason, the way the valuation are there, which are there today, I think, they are slightly richly valued. I would tend to be cautious on the IT services sector, especially when given the change of regime at the US. Also, one has to see how what kind of restrictions would come in terms of H-1B visas, etc. How it will impact the demand. All of those things have to be taken into the account, and keeping the valuations in view vis-a-vis the growth rates, I would tend to be a little bit more cautious at this juncture on the IT services side.
Since we're on the subject, we just chatted with Mark Mobius and talked about tech leveraging, which really is the theme which has been topping his charts as well. But one should look at pure play IT names, or is it time to look at software and semiconductor companies as well? Hear out his thoughts.
India stocks, but particular Indian technology stocks, and more specifically, semiconductor manufacturing and companies related to semiconductor manufacturing in India. I would say, again, it's no guarantee, and I must say I'm not buying the stock yet, but a company called New Gen Software would be a good one to look at.
Okay, so New Gen Software is the stock on Mark Mobius's, Christmas shopping list per se. But on that note, Sampath, we let you go. Thanks so much for making time and speaking with us. In fact, time now to slip into a very short break. But as we do that, let's quickly take the closing trade ideas from our technical experts. Kunal, you go first.
That'll be a ban. Vedanta is a classical sign of a breakout of the the stock moving into a band from 470, 475 as a base towards 500 levels. So expecting this move to get into a more follow through up move for the stock. 540 could be a a near term target for Vedanta. So that's a buy.
Vedanta is a buy coming in from Kunal. Naresh, what are you recommending on the charts today?
So that would be a buy on Tata Motors for a bounce back. The stock has crossed the 10-day high and has corrected a lot from 1150, 1200 all the way down to sub 800 levels. So expecting a bounce back here.
Tata Motors. We're going to take a very quick break. Come right back. We'll continue tracking markets on the other side. Back with closing trades right here in ET now, holding out flat still. But yeah, individual movers like we've been flagging off. Bajaj Auto has made a dash. iShares has been a strong performer from the word go. IRFC as well, I can see on my screens, has propped up a good 6%. A delivery climbing up even further, a good 6.5% of a move. And then MCX, which is scaling higher by about almost 7-odd%. Sudeep Bandyopadhyay too joins in on the show right now. Sudeep, these market-related themes have really come back to the fore, right? I mean, yesterday you had a big breakout in the likes of an Angel One. You had a BSE hold out very well, CDSL, etc. Anything that you find interesting here?
Well, BSE definitely looks interesting. The valuation is not cheap, but I think the way CDSL is moving up, and BSE holds significant stake in CDSL, that adds to the momentum. Of course, the new changes which have been introduced by SEBI does benefit in a way BSE more than it does NSE, and that's also adding kind of fire to the fuel. So BSE definitely, and overall market infrastructure companies from a long-term investor's point of view definitely look attractive. Somebody can buy it and decide to hold it for a long time. I think they will keep getting decent returns from these companies even at current levels.
Point taken. In fact, Mark Mobius also talked about this as one of the themes he's watching out for. Hear out his take.
Particularly interested now in the aerospace sector in India. I think companies like Bharat Electronics are going to be very interesting going forward. So we're looking at that. And of course, software continues to be a big target for us. And we're looking at a number of software companies and companies, by the way, that are doing backroom kind of processing, paper processing. There's still a lot of work to be done in that area, despite computerization. You have companies like Central Depository that needs to do a lot of paper processing in addition to computer processing. And of course, with technology introduction, that work will become much more efficient.
Okay, so the Central Depository, is the stock he's watching out for. CDSL, that is, and BL is the other one, because aerospace is one sector that Mr. Mark Mobius believes is poised for growth as well. Just watching out for some of the buzzers in the trading session right now. So, of course, we pointed out how delivery is doing quite well. But in the last few minutes, Fortis Healthcare has also managed to perk up. In fact, there was that news flow regarding Paytm as well, wherein there was that deal that they are looking to do with the Japan's PayPay. My colleague Sumita will join us shortly to talk to us about that. In fact, she's right here. Sumita, tell us what's the latest and what's brewing with Paytm.
Yes, in fact, Paytm is looking to sell its shareholding in Japan's PayPay to SoftBank, and in fact, that could be sealed for $250 million is what sources are telling us. Sources also say that these deal talks are in their last leg. Now, remember, this is coming in after SoftBank Vision Fund completed its exit from Paytm earlier this year, and also for Paytm, this move could be in line with its strategy to focus on its core payments business, and of course, the fact that it is looking at ramping up lending business after RBI's decision earlier this year. Remember, Paytm also sold its events and ticketing business to Zomato. That deal was valued at over 2,000 crore rupees. So Paytm really focusing on scaling its core payments business post those regulatory hurdles earlier this year. In fact, it was also focused on a restructuring drive to cut costs within the company. And of course, it then received an approval from NPCI to onboard new UPI users. But let's understand a bit about this Paytm PayPay Association. Now, the association dates back to 2018. Paytm partnered with PayPay Corporation, which is a JV between SoftBank and Yahoo Japan, to launch QR code-based cashless payments. and which is where Paytm reportedly provided the tech stack for the business. Now, what are the implications of this sale or this deal if it closes? Now, once this closes, it is expected to increase Paytm's cash reserves from over 10,000 crores to about 12,000 crores, and that will, of course, be significant for the company's operations. We reached out to Paytm, but Paytm said that we will provide an update through the appropriate stock exchange filing in due course. But let's also take a look at the earnings of the company. Well, EBITDA for the company was at 404 crores, which was an improvement from 388 crores a quarter on quarter. PAT stood at 930 crore rupees, which of course had the exceptional gain coming in from the sale of the entertainment and ticketing business.
Okay, that's that on Paytm. Sudeep, what is it that you're making of some of these comeback stories, if you can call them that? Case in point being Paytm.
Well, I think I must say that, Aisha, they're doing the right things. They are kind of coming out of unrelated diversifications and where the focus is not there. They're trying to stick to the core and build a robust business. So these are all good steps. And I'm sure they will stand the company in good stead going ahead. Of course, the market has also rewarded. I mean, in fact, I think the Paytm share price has tripled in a very short span of time. So valuation-wise, I would probably not recommend a buy at this stage. But I think as a corporate, I think they're trying to do the right things. Also, I must talk about, since you talked about the platform companies, I like Delivery, and I've been liking Delivery for quite some time, even when it was down in the dumps. And I strongly believe that that company has the potential to even now surprise on the upside. Logistics is a thousands of years old business, and they are streamlining and digitizing that entire logistics space to run it in a more efficient manner. And this will definitely be rewarding for the shareholders in the long run. Amongst the other platform companies, of course, I like Zomato for quite some time. Though Swiggy is improving and things are looking up as far as Swiggy is concerned also. But, there is a tendency of winner takes it all in these kind of businesses. So at this stage, I'll stick to Zomato only.
That's the take coming in on some of these platform companies and what's happening. But overall for the market, Axis Bank is also actually doing quite well. It's been a bit of a late bloomer of sorts, because of late most of the headlines and limelight has been hogged by HDFC Bank and maybe ICICI Bank to an extent, given the outperformance. But Axis Bank is finally perking up today, and that bounce back in Tata Motors that Naresh and Kunal were also talking about. But on the back foot, Cipla continues to be under pressure. Asian Paints is down and out. Adani Ports is down and out. What do you make of some of these paint companies, Sudeep? Is it just time to stay away from Asian Paints and other blue chips as well? I mean, Britannia has been completely out of favor when it comes to consumption. HUL too hasn't done too much around it. Some of these consumption-led heavyweights, just stay away?
Anisha, I think paints is a different issue altogether. There is intense competition with the coming in of Birla Opus, and there are a lot of destabilizing things happening in the paint industry at this stage. So as far as paints is concerned, I will definitely recommend staying away. As far as overall FMCG scenario is concerned, and you talked about HUL, Britannia and others, my view is that I think some of these companies, the price have corrected and they do look attractive at these valuations. India is a country of 140 crore people. Yes, earlier rural demand was subdued and the company suffered. Once rural demand picked up, unfortunately, urban demand was subdued and they were suffering. But I think the festive season as well as the next quarter, I think should be good for the FMCG companies, and consumption is the way we are reading the ground reports is coming back, at least as far as FMCG is concerned. And I'm reasonably confident that FMCG will surprise us on the positive side in the near future. So yeah, general FMCG, whether it's an HUL or a Dabur or some of the other companies, even Godrej Consumer, which has a global exposure in multiple countries, they do look good at current levels.
Okay, that's that on what the consumption theme is bringing up. Talking about that, let's just address what's happening within the autos pack, because look at the surge in Tata Motors. It's back at 818, about a 3% gain today. And of course, there's been a Bajaj Auto and Eicher, which have also been going strong right from the word go today. Naresh, do you sense any rebound and a meaningful one at that, other than M&M in the auto pack?
So bounce back could be possible in Bajaj Auto, given the fact the stock has corrected from 12,500 all the way down to 8,800 levels. And this was the support the stock had back in 2000, start of 2024, multiple bottoms around this area of 8,600. So bounce back towards 10,000 also could be possible on Bajaj Auto. We are seeing a similar bounce back play out in Tata Motors. So many of the auto names which have fallen 25% from the top could see a recovery of 10-15%. And post that get into a consolidation. Eicher Motors and Mahindra are the leaders in terms of relative strength. So they could be candidates which could break out going forward.
Point taken. So those are some of the stocks that one needs to watch out for. But overall, infrastructure and capital goods themes start getting a lot of traction just ahead of budget. Sudeep, we are entering that phase where the pre-budget consultations have kick-started today, and the finance minister is meeting the economists. But do you sense that pre-budget rally in some of these defense names and infrastructure companies is likely to happen this year as well?
Everything is possible, Anisha. I think that will depend on how FIIs are looking at Indian market at that point of time. December, I think, is a little too early for a pre-budget rally. We will have to wait for maybe towards the mid-January. We will probably see some kind of a rally coming back on expectation of a positive budget. Look, what's happening is the defense stocks are not cheap. Infrastructure stocks, by and large, are not cheap. So for a rally to happen, there has to be a solid reason and solid liquidity coming into Indian markets. We'll have to wait for these to happen. There are pockets in infrastructure which are looking even now reasonable. I would talk about Larsen. Even at current level, for a long-term investor's point of view, I believe Larsen does look good and can be picked up. Amongst the other companies, BHEL, performance used to be always bad, but last quarter they turned it around and the performance beat market expectations. There is no dearth of orders. There's a significant amount of orders they're getting and will continue to get with the kind of upsurge in power demand in the country. So BHEL also can be looked at current levels. As far as defense is concerned, I have been liking Bharat Electronics, BEL, for quite some time, and I continue to maintain my positive view on BEL. That's not only aerospace. I heard Mark Mobius talking about aerospace and related BEL recommendation. But BEL is a company which does supply electronic components to defense, whether it's Army, Navy, or Air Force. So, it's got its application across the spectrum of defense uses. And it has been a well-managed company with a strong balance sheet for a very, very long time. And the order book is, of course, solid. So Bharat Electronics, from a long-term investor's point of view, and even at current level, does look good.
Taken. In fact, since we're talking about India and the FII view on India and all of that, let's hear out what FM also has to say about India, because she continues to believe that we'll be one of the fastest growing emerging market economies.
Quarter 4, which was very good, had an impact on Quarter 1. So the numbers were not alarming when you saw it. But Quarter 2, when it slows down and when growth numbers are reflecting, we should put it in the context of an economy, a governance structure, which was all focused on election. And therefore, Quarter 1's emphasis more on running the election through had a bearing on Quarter 2. It's not a systemic slowdown. It is more absence of activity on public expenditure, capital expenditure, and so on. So I expect Quarter 3 to also make up for all this. So the growth number is something which is not necessarily going to get badly affected. We need to also push up on very many other factors. So I would think India still, not just for this year, but for the next year as well, and the year after that also, very good chances and opportunities for India to remain as the fastest growing economy.
Back with closing trades right here on ET Now. Still, it's pretty much the same set of stocks and the same mood in the market. We're still flat on the index. While it has been a little bit choppy today, largely we've spent the better part of today's trading session absolutely flat in trade. Tata Motors, Bajaj Auto, Axis, Maruti, Autos definitely making a comeback today, as are some of the metal names, Tata Steel, Vedanta, they're definitely getting a good fillip up. And then there is L&T holding higher by about 1%, whereas HDFC Bank a little bit tempered today, as is the case with the rest of the IT pack too. But here's an ET Now exclusive, and we understand from our sources that the government is planning to implement a national single window system for GSTIN for sugar millers by December end. Samir is here with all the exclusive details.
In a move to bring transparency in the sugar sector and also to provide relief to the consumers by keeping the prices of sugar under control, the government plans to integrate national single window system with the GSTN, and this integration is likely to take place by the end of this month. And with this integration, government understands that the quantity of sugar produced by the sugar millers or the producers, and whatever the quantity that is being sold in the market, that will be cross-checked, it will be verified, and the government will be having a clear picture that what quantity is being produced by the millers and the sales as well. So with this intention, the government plans to integrate the national single window system and GSTIN portal. And government has been receiving inputs from multiple sources that earlier the sugar producers, they were not actually providing the right picture to the government, to the ministry. Earlier, whatever the quantity that is being produced, this number was provided a bit late, duration was not matched, and also it was seen that the quantum that is being produced, less was given to the government, and then a larger quantity was being sold in the market. So there was a gray area when it comes to the actual data and the ground reality. So with this purpose, to maintain a proper transparency, government plans to integrate the portal with the GSTN portal, and government understand that this will also help to check the availability of stock, the stock availability, and also this will help to identify that yes, sugar prices are under control, and wherever there is a requirement, government can actually provide and step in by providing the sugar in the much demanded area.
So point taken as far as that data collection is concerned by the government. Honasa Consumer has taken a bit of a knock in the last few minutes. Pull up that stock. Aegis Logistics is the other one, and there was that announcement of a large order for Kalpataru Power of around 2,000 odd crores, but the stock has taken a bit of a tumble. So Honasa, Kalpataru, as well as okay, Kalpataru is a bit wobbly, but Honasa I think has taken a bit of a dip as well. So yeah, there's that 3.5% slide coming in yet again. In fact, Sudeep, come in on this one. I mean, we did discuss some of the platform companies, but Honasa has been one of those big disappointments. Even MapMy India for that matter, wherein the street is a bit taken aback by the kind of corporate governance issues or the lack of transparency that has come in. What do you make of some of these stories and what's happening in the market right now?
As far as Honasa is concerned, post-listing, there was a lot of excitement, but I think the results and the management commentary was disappointing, and that led to a lot of rethink as far as Honasa is concerned. It will take some time before they are able to bounce back. I think it's a house of brand. That's what they're trying to build, and I would say potential is there. They have to get their act together, undoubtedly, and I think they will eventually. But at this stage, I think it's better to wait and watch. As far as MapMy India is concerned, it was a bit of a governance issue, and I think market rightly kind of flagged it off and corrected sharply, and they also retraced the steps. So I think these are lessons for the newly listed and the new generation entrepreneurs, where the governance as well as the discipline of an operating in an organized and structured manner is being indirectly taught to them by the markets. I think it's a good discipline which is being taught to them, and I think they will learn fast. I remember a lot of companies, a couple of years back came to the market where if you ask about profitability, they were answering that that's not one of the parameters they are tracking. But very quickly after they got listed, they came down to track those parameters, and now they are struggling to meet those expectations. So market is a great leveler and a great teacher in one way.
Consumer, let's also get in some BTST trades going on that note. Just 6 odd minutes left to go before we wind up for the day. Kunal, what's on your list?
So the first one is by Oberoi Realty. That's a chart which is heading towards a breakout about 2100, 2150 levels. So BTSC targets of 2250 and stop loss to be kept at 2090 for Oberoi Realty. And the second one is a BAN IRFC. That's a chart which is confirming or on the verge of confirming a 200-day moving average breakout, just about at 158.5, 159 mark. So would suggest a buy with 175 as a target, stop loss at 150.
Right. Naresh, what about your strategies?
First is a bounce back on Tata Motors, buy with a stop loss at 800, target price of 830. Second is a breakout trade, Axis Bank, which has broken out and showing the latest trend today, stop loss at 1170, target price of 1225.
We were talking about Honasa and MapMy India. What do you make of Ola Electric? I mean, that entire consumer, disservice kind of angle really continues with more headlines coming in, with CCPA asking for more disclosures. There are reports doing around that in a survey, 99% of the customers were dissatisfied with their products. What do you make of this company, this stock at this price?
Well, I think you're absolutely right as far as consumer dissatisfaction with post-sale service, and it's a genuine concern. But I strongly believe that at some point of time, they will overcome this. But the real challenge to me is the huge battery plant which they are setting up with a significant capex. And that's going to bleed for a considerable period of time. And considering what's happening in the global market, the way the battery prices are coming down, whether that's a wise decision to backward integrate the battery plant, I'm not very sure at this stage. So I'll very keenly watch the progress of the battery plant. Yes, the consumer complaint is a real and genuine issue at this stage, but I'm reasonably confident they'll get their act together pretty soon. As far as the valuation and the price is concerned, I think it's better not to touch the stock at these levels. Competition is intense. The established players, two-wheeler players are all coming up with their own EV two-wheelers. And the Ola is bound to lose market share, and that's what is happening. So let things stabilize a bit more as far as Ola Electric is concerned before one ventures into buying this stock.
Okay, Sandeep, great to have you on the show. Kunal, Naresh, we'll let you guys go as well on that note, and I'm going to hand it over to Snehi for the closing trades.
Absolutely. We were expecting to see some moves coming in on the Nifty today, given the commentary that we've heard coming in from the RBI governor. You had some moves coming in while he was speaking, but after that, it's been largely a lackluster day of trading coming in for us. Nifty slightly under pressure, 0.1% lower, but continues to be under that 24,700 mark today. So that's slightly disappointing to end the week on. Let's pull up Sensex, take a look at what that's doing. In tandem with the Nifty, rather 0.1% cut coming in for the Sensex as well. The real show of strength today was coming in from the broader markets, because you had Nifty mid-cap that continued to hold on to gains. Good moves coming in 0.4% higher, but it's the Nifty small-cap that has yet again managed to outperform all its peer indices, and 0.8% uptick coming in on Nifty small-cap today. Advance decline ratio quite evenly distributed, slightly in the favor of the advances today, so that was looking good. If you take a look at what's helped the index today on the Nifty front, you have Tata Motors, Bajaj Auto, Axis Bank, BPCL and SBI Life that have all done very well in trade today. However, what was weighing on the index today and did not do well was the likes of Adani Ports, Cipla, Bharti Airtel, HDFC Life, Asian Paints as well as Ultratech Cement. Let's take a look at some individual sectoral gainers and losers in trade today, and top sectoral gainer today was metals. All the luster was there, if you could call it that, because shining away in today's trade, 1.5% uptick roughly coming in on Nifty metal today, followed by auto, PSU banks, FMCG, energy. All of these are your winning sectors today. However, what did not do well when it comes to sectoral performance was Nifty IT, Nifty Realty, Nifty Media and Pharma. All of these have continued to be under pressure today. But if you take a look at what worked out for Nifty metals today, you have the likes of Vedanta, Hindustan Zinc, NMDC, Jindal Steel. In fact, MCX crossed that 7,000 mark for the first time, and is sitting at fresh record highs as well. So good day coming in for MCX. You have a 6.5% uptick coming in. Right now, it's quite under that 7,000 mark, but nonetheless, a day of fresh highs coming in for MCX as well. Quickly highlighting a couple of stocks that were in focus today. You had Paytm on the back of that stake sale that we are getting reports of in Japan's PayPay to SoftBank for 250 million. Paytm up 2% on the back of that news flow. You had banks that were in focus after Shaktikanta Das has announced the
reduction of the CRR by 50 bips, and you have the likes of HDFC, Axis Bank, Bank of Baroda, PNB, all of these banks, and this is applicable for all banks. So all of these banks were in focus today. Zaggle Prepaid, on that partnership with Hitachi, that stock was also holding up pretty comfortably in today's trade, and you have that stock in fact in upper circuit. It was locked in upper circuit of 5% today. Garden Reach Shipbuilders, on the back of signing the contract for their second out of the 4 ships that they have agreed to sign on, so that stock is also held up pretty well, almost a 1% uptick coming in for Garden Reach as well. Rights on the back of an order win coming in from IIM Ranchi, Raipur, pardon me, 148 crores is the order win, so that stock is also held up pretty smartly. And a couple of stocks that were in focus on the back of brokerage note today. You had a City Union Bank initiation coming in, that stock is also done pretty well. But well, to sum it up, it's been a rather lackluster trading day coming in. 24,670 is where we are closing, under that 24,700 mark that we did manage to breach at some part of the day, but this is how we're shutting shop today.